The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, taking a look at Thursday's market action, a bit quieter than what we saw on Wednesday post-election. Stocks were quieter. For the most part, everything was quiet with the exception of soybean oil and soybeans taking off to the upside on the day Thursday. We're going to talk about that, plus the Federal Reserve cut interest rates as expected, a quarter point on Thursday. So they wrapped up their November meeting, and we got a WASDE report on Friday. So a lot to talk about and dissect here. Let's run through it. Joining us now for market analysis, Brian Doherty, Senior Market Advisor at Total Farm Marketing. Brian, good to catch up with you, and I know I've gotten a little sleep now post-election day, wondering if you did the same as well, Brian.
I got more rest last night than I did the night before. So, yeah, it was, things are close like that. It's like anything. It's like a close game. You just don't want to walk away and be surprised in the morning. So, interesting election, interesting market move. You saw it yesterday, of course, where the stock market just exploded. So, I think there was maybe for investors, a collective sigh of relief that this idea of maybe a tax on unrealized capital gains might be old news, dead on arrival, whatever you want to call it, and that corporate taxes might not increase as Vice President Harris was suggesting that there'd have to be a raise there. So interesting there. Don't know if it had big impact on other commodity markets, in particular grains. We've had beans move up. There was some talk today that because of the soybean oil market continues to move up, because of this Malaysian palm oil market continues to move, and a shortfall again of supply of soybean and vegetable oils, and then talk of maybe tariff on imported vegetable oils or cooking oils. So all of a sudden, the soybean oil has got a big surge in it lately. Where to exactly attribute that to, I don't know. But the traders seem pretty interested in buying soybean oil, selling soybean meal. But even meal finished up a little bit today, which so you got the three cylinders clicking there today: beans, bean oil, bean meal, all higher. But the catalyst has just been this bean oil market. It's just been on fire here. In particular, you take a look at it, trading in last week, let's just say around 41.90, had a low there about 41.36, and all of a sudden at 48.32 today. So 7 cents in a couple of weeks. 7 divided by what? Let's just say 42. That's a 16.7% jump in just a very short window of time. And that's after a big increase from the low in the bean oil market that came in mid-August.
Thinking about soybeans, I know in the overnight, as we got the word that Donald Trump's heading back to the White House, we saw beans break hard. There's been all this talk about tariffs, yet beans finished firm Wednesday, and then this big explosion on the back of palm oil, veg oil, bean oil, etc. on Thursday. So I wonder in this soybean trade now that, say, for instance, front month beans up above 10.15 and a half on the close Thursday. I mean, looking at charts, could we open ourselves up to some topside momentum in soybeans, Brian? What do you think?
Well, you could. I think it needs a little bit more something behind it, and that could come tomorrow. Now, there is a USDA report tomorrow, and there's, a fair number of people have said, hey, this August weather had a little bit more bite. It was pretty dry and into September, and it dipped into the bean yield more than maybe 0.3 or 0.4 of a bushel, which is what the pre-report estimate is. So there might be something there. Remember, export sales have been pretty good, and the whole question, even up to the election before as well, are buyers going to front load this thing in case Trump wins, and now Trump's win, and the market quickly falls apart, like you said, on the overnight, and then comes roaring back? Or is it because it comes roaring back because the thought is, well, maybe there'll be tariffs, so we better get it bought sooner than later? Right now, he's still, 70 some days from being sworn in, and then you got to, work the tariffs. So there's a pretty big window here if I think anybody really wants to import something and they're worried about tariff, that they can get it done sooner than later. So it seems to me that's where the vote is right now, maybe making sure you're buying inventory. Here's the bottom line, though. I'm going to continue to argue this. Beans are a cheap product. Corn is a cheap product. Wheat is a cheap product. the stuff, I'm going to say I wouldn't say it's on sale, but it's cheap. It's good value to the end user. So get it bought sooner than later, I guess, would be my view.
How about that corn market? I'd say it's been steadily firm to higher here the last several sessions. I know we got D-scored up through that 420 handle up to 427, I believe, on Thursday's close. I mean, you take a look at corn. Anything big standing out to you? I know we continue to have robust demand, et cetera, et cetera. Anything big for you on the corn chart right now, Brian?
Well, a couple of things on the corn chart. We're getting a nice retracement back toward the previous high. But what was really impressive yesterday is the market broke through what I have on my chart. If I took the high from early October and then it sold off, and then it rallied back not as high on the 24th, and you connect those 2 points, you get a downward trending line, and then the market went right up against that. The previous 2 sessions prior to yesterday, and then yesterday it just blew right through it. So why did that happen? Well, we've had good export sales. I want to maybe believe that there's some who think the yield number could be off a little more in corn for 2 reasons. One, again, dry weather, August, September, but 2, how fast the corn dried down. And then the third thing is farmers are just kind of closing the bin doors here the last couple of weeks. They're not selling much of anything. And we continue to hear that echo. Farmers just aren't that interested in selling. They'll kind of dig their heels in and see if we can't wait it out, get your typical kind of March, April, May window to sell. And so I think you've got some short cover there. I think you've got maybe some buy hedging there, but I think you've got some speculative interest just saying, hey, farmers are going to sell. Let's get this thing bought. I don't have any kind of right today, any kind of a thing or concern, I guess I should say, today with Southern Hemisphere weather. I just think as a whole, it's good enough. So I really can't point to that. So I was a bit surprised in the strength of corn yesterday, but maybe it's contrarian. The idea that the markets were going to head lower after harvest here. They haven't. It's just again, I go back to the export sales have been good. We've had announced sales almost daily. And that tells me there's underlying support. You're getting a nice saucer bottom in the chart. The bullish key reversal from mid-August continues to hold. A little concerning here at the middle of October, and then we got a bullish key reversal there again, and the market's been up, and it now looks like it's maybe poised to try and challenge 435 on December, the previous high, and where it looks like it might head to on a now I've got a different line there called upward sloping channel line.
One has to wonder here, and I wonder specifically myself, if there's a magic number that could maybe open those bin doors again potentially here. I've heard, and we've talked about this quite a bit the last several weeks, Brian. Basis is firmed in many areas. There's been some push bids, things of that nature. But to your point, the bin door shutting a bit here. I just wonder what it could potentially take to maybe move some of that product to the end users here before the end of the year at this point.
Right. Money talks, right? So I think you need some type of bounce off what perceived the low. And I think what kind of squashed the last rally around 435 is a 50-cent rally off the low. So it just, I don't know if farmers do what I do. And I sit there, I look at a screen all day, I look at charts and that type of thing. But intuitively, they know about what a 50-cent rally is. And if you got a good crop, inventory, you got a core bins, you got to start generating some cash flow. That's where I think you start to see some of the farmers selling pickup, or a combination of maybe 35 cents in the board and another 10 or 15 in basis. There's your 50 cents. I think you've got that good of a supply out there to warrant that farmers will be sellers. And that, unfortunately, a big crop here is usually kind of the wet rag over a market, is that you've got an army of farmers that need to sell something along the way. And I know it seems like it's just happened, but for a lot of farmers, they're already post maybe 30, 15 days harvest. Harvest is kind of getting behind the market right now. I think we're 91% complete as of Sunday, probably going to be 95% by the end of this week, maybe higher, just depends on the rain.
Export sales on Thursday. Any big notes for you there, Brian, on the grain side?
I don't think there was anything that just kind of stood out that made me really, really think this through. Are we really seeing some kind of a um, fundamental shift out there that has us rethinking what we're doing? What we have seen is, I think, some just really good purchases on value. So corn comes in, what, about 109 million bushels, another very good number. Put this perspective in to date, 1,125,000,000 last year, 760 million. So remember last year how slow it was. Corn was priced higher, and eventually that lack of export sales is what led to sort of the October high, and then just this market that couldn't go anywhere, and it declined. There again, when you talk about percentage changes, uh, you're looking at a number that, yeah, we're running. I was just looking at the differential there to rework those numbers, maybe 67% higher than last year ago at this time, and that seems to resonate. 1.125, 759. Soybeans, really solid number, 75 million. So maybe that had play on today's market too. Just numbers that I think have some really good, solid bite to them. And it's funny when you read about, as much as I do, the general consensus has been continuous in the mindset that, well, beans are front loaded and they're going to slow and they're going to slow. Well, we really haven't seen the slow yet. So good number there. Uh, Put this in the VAT, 1,040,000,000 versus 890 million a year ago. Good numbers. Exports are responding to low price.
Brian Doherty with Total Farm Marketing is our guest today here on Market Talk. I want to ask you about the Fed and interest rates. I think that could set us up for the livestock piece of today's show a little bit. The Fed, as expected, cut interest rates Thursday by 25 basis points, that 4.5 to 4.75% target range. One thing they said is that they justify the easing for policy as they view supporting employment becoming at least as much of a priority as arresting inflation. What's your thoughts on that, Brian?
Yeah, how would you like to have to balance that, right? Yeah, good question. So they did make the cut. It's been expected. So that's 3/4 of a point this year. That might be it for a while. They're certainly, I think, and I haven't read all the minutes, certainly taking into account the poor jobs number of last week.
Mm.
That's really poor. So is the economy going to slow too fast? Is the question. So this comes down. I don't see that they're going to make any other rate changes, at least this year. And the rationale, I think, behind it is they've made their move. Now we see how the market responds. It doesn't respond overnight. I think the bigger story, or we relate it to, let's say industry, is, have they come down enough? Let's say for farmers, can they recalculate their loans? Can they get
Mm.
enough savings on the backside? I don't know if they have. I don't know if the banks are going to pass that along readily or not. My hunch is they will, but they're probably not going to jump really fast at this point. But to that end, um, row crop producers really need to see some input cuts, whether it's in the form of fertilizer prices, land rents, machinery cost, or interest rates, or all of them, because I think that market's still in trouble. And ultimately, why I stay friendly, that new crop corn trading now at 447, I still don't think that's good enough. I think we need to see that, move into the midwinter months and buy acres and get into that 475 to $5 area at a minimum.
I wonder, with the way the economy is, there's been a lot of talk about that. We've done it on this show, considering meat demand and dairy demand and those sorts of things. And I know we had cattle and hogs quietly mixed in futures on Thursday, yet we saw very poor weekly export numbers for beef and pork, both. So you think about that piece plus domestic demand more. I mean, what's your feeling on this livestock trade here now post-election, Brian?
Yeah, great question, because I think I don't confuse the drop off in live cattle prices and dairy in the very recent near term Don't get that confused with why exports have been slow this week. They were slow because prices were higher in the past when all these deals were made, or buyers budget and then they make their purchases. So now we got to pull back in cattle. Expectations are, and I don't know. I'm gonna think we're gonna see 185 this trade, maybe 186 dressed this week, or the live weight this week. I don't think the cattle market has momentum. And I'll tell you where my feelings are. We've talked about this all along, is that as consumers get into this time of year and they start paying a little bit more attention to heating bills, start paying attention to Christmas and budgeting and looking ahead, I think we've seen some real pullback. It just in consumer demand, a little bit slowdown in spending, and it leads to $5 and $10 drops in the live market. There's no evidence to be supply sided bearish. It's just whether demand can hold up. Pork been on a rise. The live hog or lean hog market on the futures straight up for several months now. Was too much discount. I think that also too digs a little bit into the beef demand. The interest rates will be interesting though. If the consumer and the election of Trump gets a perceptive value into the marketplace to really, give people incentive to think that they want to grow their business and not worried about taxes. We saw this, what was that, 8 years ago. The market had a really bust movement. When I say market, stock market, climate, atmosphere, and then that bled over to better demand for livestock.
Brian, great stuff as always. We'll close it out today. Anything final you want to share or reiterate with folks?
We're again in interesting times. We always are. People say, well, we've never been through this before. We've been through a lot before. So things are always dynamic and changing. I think I just, for the old crop corn and old crop beans, my message would be watch these rallies carefully. There's an army of farmers who had pretty good, if not great crops, and they're going to be looking to move. That's going to keep rally potential in check. So again, my advice is continue to, think strategy, have some target points in mind, let them get picked up, move some of that inventory. We want to be cautious coming out of a couple of years of bear markets that we don't make the mistake, dig our heels in too long, and find out that Brazil has a big crop. I always tell my customers this, you're only a phone call away if you want to really own something. But if you own a bunch of it in the bin and the market doesn't reward you, that's a long, painful process. And most every farmer's been through that the last 12, 14, 16 months.
Well, Brian, I know they can call you if they have questions there at Total Farm Marketing. That's a great way to get started. A few ways to get in touch with you. How can they reach you, Brian?
The easiest is with a phone call, Jesse, and thank you for asking. 800-334-9779. Email Brian with a Y at totalfarmmarketing.com. Happy to field any questions or listen to your circumstances. And then the last thing would be check out our website, totalfarmmarketing.com. Lots of great resources there, and you can connect with us that way or connect through that to me.
Always good to catch up with you. Brian Doherty, Senior Market Advisor at Total Farm Marketing. Thanks for joining us on Market Talk. Have a great weekend.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.